Welcome to Charts Today. My name's David Linton, and today's edition for Thursday, the 28th of January, comes to you from London. And a lot of red on the screen today. Big sell-off on Wall Street last night. The S&P down 2.5% on comments on the Federal Reserve and just a feeling that US valuations have got too high. So we're seeing the markets falling back. The Japanese yen being one thing that's up. And Bitcoin, that's a sign that we're seeing some risk on trades coming back. Looking at the dollar, we saw the dollar rise again. That's a bit heavily influenced by risk, and the euro therefore falling against the dollar, so that's quite key. Remember, this is my weekly, my daily, and my 60-minute chart with the corresponding point and figure targets. And as I mentioned, the yen actually increasing, that dollar stronger, but the yen even stronger. We've got lots of downside targets here on the short-term chart, but we're seeing quite a jump there on the yen. So we need to get it back above the cloud on that medium-term chart to be bullish, but we can see there is a bit of a change of sentiment going on there. Sterling sitting at 136.36 against that stronger dollar, and against the euro we're sitting at 112.77, still holding the bull trend there. Bitcoin, as we mentioned, is up, but still under pressure to fall below that $30,000 mark, and we are seeing this descending triangle building here. 30,000 now, a very critical level. The S&P 500 index, as we mentioned, is pretty key. In fact, I've got a bigger chart here. This is really showing the fall through the cloud. I'm posting this on LinkedIn this morning, so I just prepared this chart for that post. And we're seeing here the move below the cloud is really significant. So what it comes down to now is how far will we fall? That will give us a target on the short-term chart before we recover and then activate. So it's how far we go, then we recover, and then do we go lower still and activate? That's what we'd be looking out for on the market. But for the moment, we have broken this bearish trend. We need to get above 3,800 to break above that trend, so we'll be looking out for a recovery in the markets in the short term. The Nasdaq hasn't quite fallen through, so that's looking just a little bit more resilient, and the Dow also just holding on there. The S&P future is down a further 0.2% this morning, so it looks like we've got further to fall, and the Nasdaq future down 1%. Again, we are bearish here, and we've got targets a further 3% lower there. On the S&P future, we have a target 7% lower if we break lower than that, and it looks like today we may do. Of course, the current future price is already in the chart, so we haven't broken lower than yesterday's low, as we see here on that 60-minute chart. The VIX volatility is actually down 7%, but it rocketed yesterday. The biggest one-day rise in the VIX that we've seen in a very long time. Really massive move there. So a real change in sentiment there. So the fear index is now bullish on the medium and short term charts, so that is indicating the market is fearful after yesterday's moves. The FTSE 100 down 1.5% on the future. The cash market in Germany down 1.5%, so sinking lower there, having just made new highs. We are seeing that sell-off. Wall Street, a big driver, of course, and the CAC 40 also down just under 1%. Japan was lower. Global markets having an impact there, and also that stronger yen not helping earnings for Japanese companies. The Hang Seng, which has had an amazing rise, also just breaking through the cloud, so becoming short-term bearish. And China down 2% as well, just hanging on there, but looking like it will turn bearish as well. So we're seeing a real sell-off in markets around the globe, and we're looking at the Indian market down 1.3%. That's put it in bearish territory, and the Aussie market was down 2%. Interestingly, gold hasn't been a massive beneficiary. It's still looking pretty weak there. So on the medium and short-term charts, we are seeing bearishness creeping back in for gold. And if we look at silver, we're down 0.8% there. The US 10-year yield is down 1% to 1%. So we are sitting on that 1% level. So we've seen a real change in sentiment there over the last week or two. The medium-term trend's still holding, but we've hit long-term resistance on the cloud. Taking a look, in fact, we had earnings from Apple last night. They were pretty strong earnings, but we saw that Apple is really, over the last few days, just fairly flat. Disappointment from Tesla and others as well. So good earnings, but not quite in line or above the expectation, which is what the market has priced in. So that'll be interesting to see how the market takes these things in its stride over the next few sessions. Brent crude is down 0.2%, very much range bound. Our call this week was for a range, and that's really where we've been, very much range bound on Brent crude. We saw that opening on Monday. We're very much at the same level, and that was our call. WTI, much the same picture. US nat gas giving up some of its gains. It was up 2%. It's now down 2% on the nat gas future. So we're seeing that fall last week, rise this week, but now falling back. So a real seesaw there. Emissions down 0.5%. Sentiment weighing in there. And if we look at gas markets, they're actually a beneficiary this morning. We're seeing MBP up 4.7%. Looks like we might have found the floor at the same level that we were at a couple of weeks ago. And if we look at TTF, that's up 5%. Also just finding that floor. So this seems to be a good support level around that 19 level, and we're back above 20 euros this morning. Winter gas looking, well, the seasonal gas looking much more clearly bullish. German power is down 0.2%, sitting at 49.70 €. Just that 50 euro mark is really weighing on German power. And we're seeing we've had that massive run up and we've just stopped. And if we look at Nordic power, no change on the cow, but we are seeing a bit of a movement there as well. That's it for today. Until tomorrow, happy charting. See you then.